Hi everyone, welcome to this foundation lesson where we will explore the key accounting terms you need to know before diving into accounting. The first term that we need to know is the balance sheet. The balance sheet, the balance sheet is one of the key financial statements. In accounting, we have three financial statements. We have balance sheet, income statement, and cash flow statement. Balance sheet shows the financial position for a company. The second term to know is the asset. Assets are resources controlled by the company, is what the company owns that have value. They are things that can be used to generate income or support operation. Example of asset is cash in bank or cash and cash equivalent. We have account receivable. This is what when we invoice to customer and we haven't yet received money. The amount that we ask our customer to pay us, we call it account receivable. We have inventory. This is the stock. This is the value of our stock that we have in our warehouse. Now we have property, plant, and equipment. This is the long-term investment. This is the asset that we purchase to generate profit in the future. Example, computer or any machinery that you buy in order to generate profit in the future for the company. So we have done with the first part, which is asset for our balance sheet. Now let's move to the second part in the balance sheet, and we call it liabilities and stakeholders equity. We will start by liabilities. These are obligation or debts business owes to other. In simple terms, liability represents money that your business is responsible for paying in the future. We have accounts payable. This is the payment that should be done to your suppliers. Salary payable. This is the money that the business should pay their employees. Tax payable, which is the tax that the company should pay to authority. The social security payable as well. We have a loan payable. This is the money, the loan that we get from the bank, and we haven't yet paid yet. Next, we move to stakeholders equity. Equity is the owner's interest in the business. Equity is calculated using the formula assets minus liability, and we get stakeholders equity. Common stock. This is the money where the investor put in the bank. A returning earning. This is the accumulative earning. This is the accumulative profit for the company. Then we have dividend payable. Dividend payable is the amount of the dividend that the company hasn't not yet paid. Now we have total liabilities and equity. As you can see here in the Excel file, that total asset equal total liabilities. Balance sheet, usually in accounting, we make 2 years for comparison. This is the standard. And you see here that we have the year 2024, then 2025. Now we have income statement. And the most important part in the income statement, we have net income. This is the amount of the sales that's generated by the company. Then we have the cost of goods sold or cost of sales. This is how much costs us for these sales. When we sell product, how much that costs for our company. Then we have gross profit, which is the difference between net sales minus cost of sales. Then we have operation expenses. This is our day-to-day costs to run the business, include wages and salaries, training costs, travel and entertainment, rent, office suppliers, insurance. Now we have operation profit. This is the profit generated by the company, which is calculated by gross profit minus operation expenses. We have net income. This is the value that's left for the company after paying all the expenses, including the corporate taxes. So this is the value that will be distributed to the shareholders. In accounting, we have a chart of account. We get all different accounts that we'll use in accounting. Some are asset accounts. We have liabilities accounts, revenue accounts, and expenses account. In accounting, you may hear about journals, the transaction that we record in accounting. For each transaction, included debit and credit. Debit should be equal to the credit, which is the basic for accounting. Based on the transaction, we get the trial balance, which is a summary of all the accounts in the journal ledger, showing their balance at specific point in time. At specific point in time, it's used to ensure that total debits equal to total credits. Based on the trial balance, we create the financial statement. We have seen before the financial statement, which gets data from trial balance, as you can see here, and all the financial statements are linked to the trial balance. To summarize, we have covered assets, which is what the company owns, liabilities, what the company owns, and shareholders' equity, the owner of share of the business, revenue, income from sales or services. Then we have different type of cost, which is cost incurred by the business. Then we have different calculation, profit, which is revenue minus expenses.